to the channel. Welcome back to another video. And in this video, guys, I want you guys to backtest with me pound CAD. If you don't have any kind of backtesting journal, this will be a great video for you because it'll give you ideas as to how you can still backtest, still collect data, and still be proficient in backtesting. So guys, without further ado, let's backtest this pound CAD.
All right, guys, so when you start off the week, right, we're just playing the charts. Okay, we're just playing the charts like normal. And once you get past the Asian range, essentially slow the chart down, right? So you have time to really think about what's going on, or just play the charts one candle at a time. Either way, whatever works best for you. Okay, so as you start to play this, you're basically waiting to see what kind of a setup could you potentially get, right? So, you know, if you're looking at this right now, you're possibly thinking, okay, maybe a type 1 setup, right? Now, if you're thinking that, that's perfectly fine, but you would need to get some kind of a second leg, essentially, to appear. So, let's see what we get here. You see this one's right here pinning to the 200, right? So let's just say that you think that this is the first leg here. It went all the way up, pinned to the 800, pinned to yesterday's, or let's say Friday's high, right? So that's two things going for it. Came down to the middle of the range, came right back, and now pinned the 200. Okay. So if you think that this is going to be, let's say, you know, a type 1 setup, type 1 second leg M here, right, then you would just put your stuff like this here, right? And let's say you do 30 pips. Let's just keep it simple and just say 15 pips, 30 pips as your stop loss. Now, here's what's the problem with this particular trade. Number one, if you take it, right, your stop loss is 15 pips, and it doesn't even allow you to go above the candle that you're going in, right? So that's a big problem. All right. So this stop loss is going to be pretty big. So I don't think that's going to be the best possible trade for you to take, because if your stop loss is just going to be way too big. Okay, now a second thing is, remember what I told you guys to start looking at the previous week. Okay, and one of the advantages of having this, being able to backtest, is that you can stop, think about what's happening. Okay, so if you go back to the previous week, what happened? Okay, you basically had a whole downtrend cycle, right? You had a downtrend cycle the whole week. Look, the whole week you had a downtrend cycle, right? So what does that do? What's the likelihood, essentially, of you having a continuation of that downtrend cycle? You know, not very good, right? So typically we would see one of two things on this. We would either see a movement straight sideways, or potentially we could see a hit, let's say, down to this low, and then return back up, right? So let's just see if we can get any kind of a better potential setup with this. Okay. Now we're outside of the London box, right? So we're not looking for a setup yet. Here we go. So we're basically opening the US session right here, right at 8 o'clock. And you can basically see that we didn't go down. They didn't go down to the low. They did go down to the low of Asia, right? So let's see if this is potentially anything at all that we can take. How big is this candle going to be? Yeah, see, this is going to be also pretty big as well, because it's 22 pips stop loss, right? So is this really is it worth getting into? It's really not, you know, even if it may go, let's say, up to here. Even if you do, let's say, a 24 pip stop, you know, and then now you're trying to basically get to 2 to 1, you're trying to get up to here about 48 pips or so, right? But let's see what happens here. Let's see if there's anything at all possible. Yeah, you see? So that there is no real, you can see by just putting in, a trade setup here to see, okay, is it really worth it? Is it really 24 pip stop loss is not really worth it, right? So it's not a setup. Okay, that's not a setup at all. So on this day here, you can see basically the both days we just went sideways, right? And so that's one of two things we could basically expect, essentially, right? From us coming off of a trending cycle, right? So Monday essentially was nothing but a sideways movement. Okay, accumulation, call it accumulation. It did move, granted, look, it did move 66 pips, 56 pips, but there wasn't a setup for us to take, okay, for us to feel confident in that particular trade. So now, let's move on to Tuesday, and let's see what we could possibly get on Tuesday as potential setups. All right, so now on Tuesday, check this out. Tuesday, we end up getting this big move here, starting from the very top of the range straight down. Look at this. Okay, there's a potential second leg right there. Right here, boom. Now we have something. Okay, Tuesday, we're basically hitting previous week low, yesterday's low. Okay, so we got things in our favor, right? We're coming off of a trending cycle. All right, and we accumulated on Monday. So remember that essentially we only have really two options when it comes to this type of movement on Tuesday. We could have basically, let's say, a reversal. If this is a market maker cycle here, we could potentially have essentially a move that goes all the way up from Tuesday, right? So let's see what we have here. So let's just say we can put, if this is a clear W here, okay, we can see this pin bar all the way down here. If this is going to be a clear W that we can take here, right, where's our stop loss can be basically. We can put our stop loss essentially at the below that candle, because if we're wrong about this and this is not the low of the day, then we're just going to be taken out anyways, right away, within the next candle or so, right? So where could our target be to get a 2 to 1? To get a 2 to 1, all we basically have to do is go to the 800 EMA, right? Now, couple of things that I want you guys to, when I mean about take everything, take a look at the bigger picture of things, right? Look at the EMAs. Okay, the EMAs are basically, we're going down, and then now essentially all of the major EMAs are all right here. Okay, so what does that tell you? It should tell you that we're going on basically a trend change. Okay, anytime that you have the big EMAs, the 800, the 200, right here with price, take a look, right? You should be having a trend change. So if this is a trend change happening and this is going up, potentially you have a much higher trade to go with, right? Because if this is Tuesday and let's say the whole day goes up in one direction, this should give out a pretty good damn trade. So you have a lot of different things that are basically in your favor. The only thing that's not in your favor right now is basically a stop loss of about 22 pips. That's it. But you have the pattern, you got a second leg, you got a timing, you got pegs, you got the wicks here going back to the previous week's low, going to yesterday's low. Look, they tagged this Thursday's low right here. Look, they went right back to it. Right? You're coming off of a trending cycle. Like, you have a bunch of stuff in your favor. All right? So how many things do you have in your favor that are good versus things that are not good? All right? So let's say you want to take this trade, 2-to-1 risk reward ratio, take your screenshot and start filling out the info on the trading journal. Okay? Once you do that, you can go ahead and also you can go ahead and document this. Even, let's say, before you take your screenshot, okay, put into this T here, into the text, and then put in what you're thinking. You know, put in type, you know, what is this, a type 1? Yeah, put in a type 1. You can put in type 1 setup. And then you can put all the reasons of why you're taking the trade. That way you have good notes. Right? So you can put second leg W, pins to the previous week low and yesterday's low, coming off trending cycle previous week. Okay, so something like that you can put here. That way, when you look back at this and you take your picture and you look back at your screenshot, you know what you were thinking at this time. Okay, the more details that you put, the better it's going to be for you. All right, so now just let it play and see what happens. Look, in one candle, it's crazy. In one candle, you already hit profit. Okay, now this is literally just one candle. You're still in the London session, right? So now the question becomes, okay, is this going to basically go the whole day in one direction, or is this basically going to turn around now, okay, and become an accumulation cycle, right? Is this basically now going to create the highs and the lows of the week, and is it just going to do this, right? And if it's not going to do that, okay, well, then there's only really one other option, and that's going into a market maker cycle where it's basically going to go up the entire day, right? So let's play this out and see. Okay, so let me minimize this so you already have one trade set up that's there. And then now, look, you're playing this. Okay, look, where are you? This is, go back one. Okay, where are you here in this particular point in time? It's 9 o'clock, right? We're starting the US session. Where are you? You're about 40 pips from the high of the day right now. And you're about 50 pips from the low of the day right now that's currently showing, right? So where are you? You're not at the high of the day. You're not at the low of the day. You're in the middle. You're basically in the middle, literally, right? So now you'd be looking for what? A continuation trade, right? So here on this candle, here you have, and again, if you're right, you want to be, your stop loss is going to be pretty tight on this, because if you're right on this, you're going to be right. And if you're wrong, it takes you out in one candle and you're done. Right? So, okay, so where can we take this? If this is going to be a continuation trade, okay, and you're thinking, all right, well, if this is a continuation trade, where do we take this? Well, first of all, we can definitely try to take it at the 2-to-1 risk to reward ratio, right? That's another 33 pips. Okay. Now, being pound CAD, I believe pound CAD is over 100 pips, well over 100 pips on a daily average range anyways, right? So at least this is something that's feasible. It's not impossible for you to get, because you've only moved 86 and 30, so you're at about 110 or so. Okay. So now let's go ahead and play this out and see what happens. See if we're right and see if we're wrong. And remember, you can add another text box here and put US setup or US session. You can put continuation trade setup and put whatever other details you want. But at least you know what you were thinking. Take your screenshot, boom, right? Copy it and paste it into your journal, and now you can go. And now let's see what happens. Boom, there you go. You already hit take profit already in 2 candles. Okay. So those were 2 trades right there. London, look, and it's still going. And it's still going. Jeez. Okay, so the whole day it went up. London, and also New York, right? So now it gives you an idea. Okay, well, we cleared yesterday's high, right? We're already having now the EMAs, right, above the EMAs. So what are we looking for now? Now does it start to click in now as far as what you're looking for now? So now what are you looking for on Wednesday? If you play the set on Wednesday, one of 2 things. You're either going to have nothing but sideways movement. Okay? You're going to have either sideways day on Wednesday. If this is a market maker cycle, you're going to have sideways movement on Wednesday. Or you're going to have a spike up, basically to induce more traders to go higher, and then potentially have a reversal, let's say either Thursday or something like that, right? So let's see what happens here. So now let's go in here and let's play this out. 13 pip range, and we're now moving above that range here. Wow, look at that. Let me guess it gets stuck here. Yep, pins. Look at this. Pin. What are they doing? Look, you have the 50. Look at the 50 right here. It's pushing price. Is that a coincidence? No, it's not a coincidence. It's the behavior. Look. Boom. Look at that. There you go. Is that a potential trade setup? If this is a type 3 setup right here, because it keeps getting rejected, right? You have a 14 pip stop loss. Let's say if you just put your stop loss below, let's just make it an even 15. Let's see, but your gain would be 30. You're trying to get to 30 pips up here, 2-to-1 risk reward ratio. Right? So a setup something like this, right? Let's see what happens. And by the way, you can, again, you would put in what you're thinking here. Type 3 type 3 setup. Okay, and put whatever other details you want. You can add to this saying pins to the 50 EMA and also to the middle of the range, right? So as much detail as you can. That way, if it's a loser, if this turns out to be a loser, no big deal, but at least we have the notes. When we go over it, when we go over these trades, these losing trades, at least we have all the notes, right, of what you were thinking at that time. So take a picture, right, of what it looks like, and then fill out the information on the journal, and then let's go ahead and do this. Okay, so this right here, right, think about this. Think about what's happening right now. Okay, you just had this move all the way up, and then it came all the way back down. All right, so now in this particular situation, what do? You missed your stop loss, or you missed your take profit, God, by like 4 freaking pips. 3 pips, whatever, 4 pips. You missed your stop, your take profit by that, right? So you have 2 options. Remember what I told you guys about getting out of a trade when you try to ride it as long as possible, right? Remember when it closes below the 5? Remember that? When it closes below the 5 is potentially a good time to get out of a trade because the trend is basically died off or whatnot. So let's just say you take profit, okay? Just take profit and get out of this trade here, okay? And essentially you're walking yourself out with 8 pips because you missed your take profit by like 4 pips literally, okay? And so there's no coincidence to this, guys. By the way, look how high it went. It went up to where? It spiked up here. That's not a coincidence. Okay? Trust me, that's not a coincidence. Right? So, take a picture. Boom. You know, write down the notes. Put more text here. You know, break even trade or 8 pip win trade got out because of this. Okay? Take your screenshot. Okay? And then fill out the rest of the info on the journal. And then now play this out and see what happens. Look at that. See? If you would have stayed in the trade, it would have taken you out as a loss. You see that? Wow, look at that. Came right back with a railroad track. Look, this is the amazing thing about this, right? Is like it came up to the top of yesterday's high, pinned it, came right back down. Is it a coincidence that it stopped in the middle of the range again? There's no coincidence about that, I promise you. Okay? I promise you there's no coincidence about that. All right? So remember, now if you're looking at this, you're like, wait a second. Is this basically like a big M here? Right? Is that basically like a big M? And if that is a big M, why is it stopping in the middle of the range? Not to mention it's spinning yesterday's, it was spinning yesterday's high. All right? So you have to think about all these things. And so the backtesting allows you to really just think about it and just stop and really think. Okay? You can't do this amount of time of thinking, right, and really think about what's happening. You can't do that when the charts are playing live, right? So this is the time. This is why you backtest. You can see the behaviors of what market makers are doing. Okay. Now this particular candle here is 16 pips. So let's just indulge this for a second, and say, okay, well, if they're pegging the middle of the range again, and it's only 9:15, 9:30 now, right? This is going to be what, another 16 pip trade, and basically to get up to, let's say, 30 or 2 to 1, you basically have to go up to here. Okay. Now, this could be basically a potential trade to go up here, or it could be, let's say, a loss that happens for us, right? We don't know that. Okay. But based on what we do know so far is that, essentially what we're potentially expecting is a sideways movement on Wednesday, or another spike up and a false move, and then the reversal comes on Thursday, right? So you basically have a decision to make. Do you, don't worry about it, or do you take a chance, essentially, on this? Okay? And if you are going to take a chance, then make sure you type in, what you're seeing, right? What you're seeing on this and why you're taking the trade. I'm taking the trade because I see that it's pinning to the middle of the range again, and you got railroad tracks here again. Okay, so this could have been basically a type 1 setup here because we're obviously above the range here, right? But it came down and look, and it stopped in the middle of the range. And I believe that we're going higher. Okay, so take a screenshot of the reasoning and just play it out. Wow, look at that. Holy smokes. Look at that big, humongous candle. So there's another trade right there. Okay, there's another trade right there that just made up for this one on the previous one that you took. Okay? And the same principle, look, pinning to basically to the 50 still, right? Because it came down and it basically railroad tracked right on top of the 50. I can't imagine this is going to continue to go up anymore. Yeah. Oh, no, it is. Look. Wow. Look at that. So there you go. 138 pips. 138 pips. Wow, that's amazing. So that's 2 trades right there. One that's only an 8 pip win. Another one, boom. That was 30 pips or even more if you were paying attention to it. Okay? So now let's go up. Let's go up to Thursday now. So on Thursday, what do we expect on Thursday, potentially? Really, we're looking for one thing. I would really like to see a reversal here. Okay, because this fake move, if this is not a reversal, then this turns into not a market maker cycle, but it turns into basically a trending cycle, right? So let's see what we end up getting here. So let's see what we end up getting here on this day here. Look, we get a false move straight up, pinning to previous week's high. Can we get a second leg to this? Right there. Let's see if this is it or not. Boom. Do you see the behavior? If this is it right here, this is going to drop. Pin it again. Pin it again. Oh my god. Oh, right there. And again, look at this. Look at the behavior. Look, this is what I'm talking about. Look. Pin, second leg. It doesn't close below the 13, right? And it's all the way at the edge of the box, right? Look, they go up again. And then look, they pin it 1, 2, 3, boom. Here, and remember when I told you guys that essentially if they go above this high here, right, if this is really the high of the day, they got about maybe 30 to 45 minutes to play up here. But then they have to come back down, right? So let's just pretend, let's just not even pretend, let's just put this up here as what this potential trade could be. Right? So to get a 2 to 1, basically this, we'd have to go here. Now, what is the only thing that's really against us right now? You know, would be again what? The stop loss. Right? 21 pips. Everything else though is with us. Right? Look how far these freaking EMAs are separated. Right? We haven't gone back to the 200 since what, Tuesday? Or we haven't been close to it since Tuesday. Okay. We clearly have a move here, a setup here. The behavior is all there. Right? So go ahead and put in your thing, type 1 setup. Type 1 setup. You can put pin to, what was that? Pin to previous week's low. And see, Thursday, midweek reversal. Okay, so something like this. God, I misspelled that. Okay, whatever other notes you want to put on here just in case you lose this trade that we can use to help you. All right, take your screenshot, put it into the journal, fill the rest of the journal out, right? And then just play it and see what happens. Boom, look at that. There you go. Hit your take profit. Go ahead and finish off the day right here. And then take a screenshot. Boom. And then write in your journal the rest of the you know, of the stuff for the day. Okay? And then now finish off the day. And now we're going into what, Friday. So now, damn, I went through that pretty quick, but Friday, look what happened on Friday. Friday you had a 28 pip range, and look, you went out from the Asian range, went out to the middle, went out to the bottom, and then look, they did nothing but move sideways. Right? They did nothing but move sideways during that whole London session. Right? So that's garbage. You know you're not going to trade that. You know what they're doing. They're accumulating contracts here. Is all that they're doing. The real question now is, do they go up and do they tag yesterday's high and then come back down? Or what do they do? But right now we don't have a setup. Speaking of, is that an M? Look. So is that a potential setup right there? Okay. If we are thinking that's a potential setup, what's the setup look like? If we're going to be wrong, we're going to want to be wrong right away. So 17, 16 pip stop loss to get a 2 to 1 risk to reward ratio. We're going to go down to what? Basically to the bottom of the range, right? And same thing, write down what you think. So this is what, type 1. Jeez, I can't, did I type that right? I did. So type 1 setup, pin to yesterday's high, and M formation, second, second leg. Okay, whatever else you want to put on there. All right, and then let's just see. Oh, here we got taken out. Damn. See, right, man, 1 pip. You see that? Look. We got taken out right there by 1 stupid pip. See that? So if you would have made 20 pip, look, you would have had way more than that. You could have taken it, damn, you could have taken that to the 200. You see? So here's something that you learn, right? Here's something that you learn. These are all learning things. Okay, take a screenshot. Look, damn, I can't keep going down. So take a screenshot, okay, and then put in the other, put it back in the journal. Okay, and if you want to, here's another thing that you could do as well, is you can all go ahead and before you take the last screenshot here, if this was a losing trade, you could put in more text, lost trade. Because my stop loss was too short, needed a 20 pip stop loss. Okay, so do that there. Take a picture and then put it in and record it into the journal. Okay, and so you can do this, guys. This is a whole week. We just went through a whole week, right? If you really want to do this and you really want to get this, essentially this is how you backtest. Okay, by getting meticulous records of everything that you do and what you're thinking about. Because when you look back on this, it's going to help you. It does you no good, okay, for you to do this and for you to not take any notes or not write anything down, because it's like, what's the point at that point? Is it going to suck at first? It is, because you got to get used to this, right? But I promise you, like literally once you start doing it and you start to get into a rhythm, okay, you're going to start to be a lot faster at doing this. And you're going to get better and better and better. I promise you, you're going to get better. And this is how you get better. This is how you get consistency. Because you can't be a full-time trader if you don't have any kind of consistency. And this is how you get that consistency. All right?
All right, guys. So I hope you enjoyed that backtesting session. I hope you got some value from that particular session, and also just some insight into things that you could do differently if you don't have a backtesting journal and you don't want to do it on paper, right? You could just simply put the data points that you want to collect or the information that you want to collect on the actual TradingView screen, and you could just take screenshots of it if you like. Okay, there are many ways to backtest. This is just another different way that you can backtest if you want. Okay, everything is completely up to you as far as what makes you more comfortable within doing the actual backtesting itself. But I have several videos, guys, on different ways that I backtest, and again, it just will fit different traders at different points. If you like this type of content, guys, please give me a like on the video and let me know in the comments below, and we will see you in the next video. Guys, if you need any more help or you like the content that we provide on this channel, come on over to the FXN MasterClass. It's available right now. What you get essentially is a lifetime membership, a full mentoring course, an advanced course. You get the Blue Summit videos, weekly Q&A sessions every Sunday, group session archives, which that by alone has about 100 hours of content, weekly analysis videos, midweek analysis videos, MT4 and MT5 indicators, a customized trading journal so you could actually journal your trades every day, and then a backtesting journal that you can use to backtest and collect all of your data. Not to mention a mentoring private chat, guys. So all the information is in the link in the description if you want to join now. We look forward to seeing you there, guys, and take care of yourselves.